Hello and welcome back to James Nuss. Today we are diving into a topic that's been making headlines lately, the potential for a new financial crisis and the next Big Short. You may have heard about Michael Burry, the investor who famously predicted the 2008 housing market crash and was featured in the movie The Big Short. Recently, Burry took to Twitter to warn that the current market is dancing on a knife's edge and that a crash could be imminent. His warnings come as many experts are sounding the alarm on the current state of the economy. But before we get into that, let's take a quick look at who Michael Burry is and why his warnings carry weight. Burry is a former physician turned investor who made a fortune by betting against the housing market in 2008. His story was famously portrayed in The Big Short. Now Burry is warning that the current market is showing signs of mirroring the dot-com and housing bubbles of the past. His tweets have made many investors sit up and take notice. In this video, we'll be discussing what it means for the economy and potential investments you may want to consider. But first, let me be clear, I am not a financial advisor and any investment decisions should be made after consulting with a professional. With that said, let's dive in. In a recent tweet, Michael Burry, the investor who famously predicted the 2008 housing market crash, warned that the current market is dancing on a knife's edge and that a crash could be imminent. Burry compared the current market to the housing bubbles of the past, noting that stock and crypto valuations have become disconnected from reality and the low interest rates are driving risky behavior. Burry also highlighted the rise of meme stocks and the potential for a short squeeze to trigger a market crash. While some experts are skeptical of Burry's warnings, his track record of predicting market crashes has made many investors take notice. The next tweet posted on March 17, 2023, Michael Burry warned of the potential for hyperinflation in the United States. He cited that excessive money printing by the Federal Reserve, rising commodity prices, and supply chain disruptions as factors that could contribute to inflation. Burry also warned hyperinflation could lead to a breakdown in society and urged people to take precautions such as buying land, gold, and Bitcoin. As I said in my previous investment videos, buying land is probably the best way to invest currently. But let's take a look at the graph that Michael posted alongside his tweet. Some analytics describe, quoting, banks across the globe are on the verge of an all-out collapse. SVB has gone under and is in FDIC receivership. Signature Bank is gonzo. Credit Suisse, a major player in the world of finance, is in the process of getting bought out for pennies on a dollar. Yet the irony is these banks are compelling, with most of them trading significantly below book value should any change in policy occur. So probably high probability here. Bank stocks should do extremely well. Now, to jump into the chart or the graph, the x-axis in unrealized losses as a percentage of common equity, Tier 1 capital CAT1 or highest quality of regulation capital, y-axis is measuring the percentage of deposits over $250,000 at each individual bank. When studying the actual banks on the chart, three things stand out: SFB, SBNY. These are the two outliers and now bankrupt. Second, the mega banks are relatively fine, so above $250,000 wise, but some have some issues on the unrealized losses side. Some banks seem safely below both medians. So these are the three main points, three things that stand out. A couple of potential stocks in question are New York NYCB, the New York Community Bank Incorporated, MTB, MAT Bank Corporation, PNC Financial Service Group Incorporation, and CFG, Citizen Financial Group Incorporation. It is clear that there are warning signs in the market and we need to be vigilant as investors. Michael Burry's warnings based on his track record should not be taken lightly. But as I mentioned earlier, I am not a financial advisor and any investment decision should be made after consulting with a professional. It's important to do your own research and make informed decisions. That being said, there are some potential investments that may be worth considering, such as the ones I mentioned earlier. Do your own research and make your own decision based on your individual circumstances. As always, thank you for watching and I'll see you in the next video.